Right now, we're going to take a minute and go over a loan estimate together. We're going to go through it line by line so that you can really understand what's on it and how to read this thing. My name is Drew Smith. I'm a licensed loan officer at Mortgage Solutions Financial. I'm going to share my screen with you, and let's go ahead and jump right in here. This is, just to keep in mind here, this is not a real loan. This is just an example, so I'm not sharing a borrower's information with you here, so keep that in mind here. But all of the loan estimates that we send out look just like this. So here we've got, right at the top, we've got some really good details, like who's on this thing, what are we trying to do, where is it, what's the date, right? So we've got all of that identifying information right there. Then over to the right, we've got more specific information about the actual loan. So we've got the loan term, it's 30 years in this case. We've got the purpose, it's a purchase, it could be a refinance. We've got the product, this is a fixed rate product. We've got the loan type, conventional, FHA, VA. We've got the loan ID, got to be able to track this thing and track it down. We've got the rate lock, okay, yes or no. It's important to know if you've locked your rate yet because it does expire, okay? And when it expires, you'll have to relock it at whatever the current rates are at that time. So it's important to know when you need to get this thing closed to lock in and keep that current rate that you and your loan officer have been talking about. Then we've got the loan terms, okay? So this is going to be the actual amount that you've borrowed or are looking to borrow, the interest rate that you've talked about, and then it's broken down into your monthly principal and interest payment. Now to the right of that, you've got a paragraph here that says, can this amount increase after closing? We've got some no's here, no, no, no. So that means that you're locked in to that product, that amount right there. So you can't increase the loan amount, you cannot change the interest rate, you cannot change that monthly principal and interest payment on this specific loan. Then below that, we've got the prepayment penalty. It's important to know whether your loan has this or not because maybe you're planning on paying this off a little bit early, right? You're planning on paying extra payments to that principal every month, maybe an extra $50, whatever. You need to know if you can or can't do that with a penalty on your specific loan. Is there a balloon payment? No, in this case. We've got projected payments. They're trying to give you an idea of what this thing's going to cost over time. So you've got principal and interest. And here now we're adding mortgage insurance and your estimated escrows. How much that's going to cost every month so that you know what your total monthly payment is going to be to your mortgage company. So that's your principal and interest plus taxes and insurance. In this case, the estimated total every month is going to be $1,050. Then it breaks it down just the taxes and insurance. So of that $1,050, $206 of it a month is for your escrows. Then here we've got costs at closing. So how much money you're either going to bring to the closing table or get. If you're doing a cash out refinance, this will show you how much money you're getting at the closing table. So it's broken down in two different sections. One's kind of fees associated with the loan. One's associated with fees if you're doing a down payment, right? So things that are other costs in this transaction here. So now in this next section, we really get to break it down and look at each cost and fee line by line here. So let's go through it here. So paragraph A, there's going to be the costs associated with the loan. We've got discount points, application fee, and underwriting fee. Your discount points, right, if you've purchased a better interest rate. So whatever rates were at the time, you wanted to get a lower interest rate, so you paid money at closing for that better interest rate. Then we go to paragraph B here. These are services that you cannot shop for, that you have to have done. So we've got appraisal fee, you got your credit report fee, and all those other fees associated with it that you as the borrower cannot shop for, okay? Then we've got paragraph C. These are services that you can shop for. So if you've got your own title company that you would like to work with, you can go ahead and shop for that. All of those fees are located here in the paragraph C. Then the final paragraph D, that's just all of those previous paragraphs added up. Now let's go to the other column here on the right side. We've got other costs. Paragraph E, these are your government fees, recording fees, and other taxes. Transfer taxes will be showed there. Paragraph F here, these are prepaids. So let's look at this. This is important here. So this is your homeowners insurance and property taxes. These prepaids are items that need to be paid at closing, okay? So in this example here, these prepaids show that we've got 6 months of homeowners insurance, and then we've got taxes and interest that need to be paid right at closing. Okay, so that's going right to the insurance company. That's going right to the county to pay those property taxes at the date that we close on this loan. Okay, and then in paragraph G, right below it, we've got your initial escrow payments at closing. And this is your property taxes and homeowners insurance as well, but this is going into an account that is going to sit there until property taxes and insurance are due later. Okay, so you understand the difference there. One is due now at closing, and one is put into an account to pay future costs. Okay, so it's your money, but it's just sitting in an account waiting to pay future insurance and taxes. Then we've got H for other. Anything else that really didn't fall in under any of the other categories would be shown here. And then we've got everything added up. And then finally at the bottom, we've got your total here, all of your line items, and then it's the estimated cash to close. Why is it estimated? Well, because, you know, things are dynamic, things are balancing right until the date of closing. So if you close a day later, a day earlier, your daily interest will change on that. Your homeowner's insurance, maybe you haven't actually gotten a policy yet. So right now you're kind of guessing based on the market and history, but you haven't actually put that policy in place yet. So you don't exactly know what the exact cost is going to be yet. So it's estimated. We try to do our best here, but sometimes we're a little off. And then we go down to the bottom here on the page 3. This is going to give you some better information as a borrower so you can be more educated to really understand the cost of a loan, okay? They really started doing this years back because when you borrow money, you know that you have to pay it back with interest, but how much is that going to cost you over the life of the loan? So this is a good area that really breaks that down and lets you know that in 5 years, this is how much you'll pay in interest, right? So it lets you know the cost of the loan. So it's important to just look at that, to read it, to be better informed and educated as a buyer. And then below that here, we have other considerations. These are going to be specific items pertaining to your specific loan, whether it's assumable and anything else that's important in your unique situation, how you've kind of structured this thing. All right. And then at the very, very bottom, where we are confirming receipt of this, where we are going to sign this, you are not signing a contract. This is not a contractual agreement. This is just a receipt saying that I have received this, I have seen this, and I am acknowledging that. That's all that signature is at this point here, and it breaks that down and it does read that in the paragraph below confirm receipt. It says, by signing, you are only confirming that you have received this form. You do not have to accept this loan because you have signed or received this form. So there you have it, a good look at the loan estimate. Of course, this was just an example. So if you have more questions, please feel free to reach out to me. My name is Drew Smith with Mortgage Solutions Financial.